Hey guys, Toby Mathis here, and today we're going to dive into the difference between the tax proposals that are put out by the U.S. candidates for the president, Vice President Kamala Harris and former President Donald Trump. We'll dive into some of the differences so you can make an educated decision about their tax policies. Now, there's not a ton of information out there. The candidates are kind of moving targets, but there are some things that they've definitely stated that they would do or not do. And there's been studies on the impact of those, and you can make your own decision. I'm not going to be political. I'm going to be as clinical about this as humanly possible. So let's dive in. Number one, the candidates are very clear. They have a big difference between their treatment of the Tax Cut and Jobs Act, which was passed at the end of 2017 under the Trump administration. It's oftentimes called the Trump tax cuts. But what we know for certain after years of dealing with this is that it lowered taxes for Americans, period. And by allowing it to expire, what you're talking about is increasing taxes on most Americans. Now, that doesn't mean that the candidates are sitting there going, like, let's say Kamala Harris says, I don't want to allow it to, I'm just going to let it expire. We're not going to continue it. We're not going to push to extend. It doesn't mean that they're just sitting on their hands saying everybody gets a tax increase, although it will increase taxes because the tax rates go up. And there's a couple things that happen automatically by letting this thing expire. Number one, the standard deduction goes down. Right now, that standard deduction, I think we're sitting at about, $14,600 for single, $29,200 for married filing jointly. That's going to get cut roughly in half if the standard deduction goes away, but you get miscellaneous itemized deductions back. But what is the practical impact of that, coupled with the brackets that got lowered? I'm looking here. I see that we went from the 15% tax down to the 12, 25 to 22, 33 to 32, and the top bracket went from 39.6 to 37% under the Tax Cut and Jobs Act. So when we let it expire, 2026, what happens is all those brackets go back. They go up. So what's going to happen to the typical American? It looks like it's going to be about an extra $2,000 to $2,500 average tax bill increase. It's obviously going to be much higher if you're in the top brackets, and it's going to be less significant if you're in the lower brackets. But if you're married, filing jointly, making about $150,000 a year, maybe you have a couple kids, you're talking about your taxes going up about $2,500 a year, just like that, by allowing it to expire. But that's not fair to Kamala because she has some other incentives that she'd like to propose instead. And I'll get into those in just a second. But let's go over what happens when the Tax Cut and Jobs Act goes away. So the brackets go up. I'm going to put a chart up right now that shows you the brackets. And you could see what occurred was brackets kind of got lengthened out, right? The higher dollar amounts and got spread and pushed out so that you didn't, it used to be the more you make, the more they take. And they kind of pushed that out a little bit so that not only did the brackets go down in some cases, again, most notably from 15% to 12, from 25 to 22, from 28 to 24%, from 33 down to 32, and from the top bracket 39.6 to 37%. But also the amount that was subject to those higher taxes. So for example, as I'm sitting here today, if you're married filing jointly, you're in the 37% tax bracket if you make over $731,000. That goes down to $583,000 when they revert. In other words, you get into the higher bracket sooner if we let this thing expire. I already mentioned the standard deduction. How about this? The state and local tax deduction, there's a limitation right now under the Tax Cut and Jobs Act of $10,000. Both candidates said they want that gone. So whether the Tax Cut and Jobs Act does not expire, Donald Trump has said, I want to remove that provision, whereas Kamala Harris just says, let it expire, and then we would get back no SALT limitations. There wouldn't be restrictions, which is going to benefit high tax states like New York and California. Itemized deductions come back under the idea of letting it expire. So that's a Kamala Harris plus, as itemized deductions are back. The child tax credit, which I believe is scheduled to go back down, Kamala Harris would like to see that go up to $6,000 For newborns, $3,600 between if you have a child between the ages of 2 and 5, and then $3,000 for children over the age of 6. So anything above 5, 6 years and above. So that's a substantial departure from where we're sitting right now. I think we're sitting at $2,000. So those child tax credits are really aimed towards families. And yeah, we need more people. I think Elon Musk is always talking about we need to procreate, we need more children. Well, here's an incentive to have more children. There's a tax credit. The estate tax brackets get cut almost in half, right? So if we are sitting here looking at estates that are $10 million for a single person, $20 million for married couples, you're going to see dramatic increases in tax if that Tax Cut and Jobs Act is able to expire. So let's just say that you're married or you're single and you got a business and a house and some assets and you're worth about 10 million bucks. And if you passed away with the Tax Cut and Jobs Act, you're going to be far below the lower limits. Right now, it's just under $14 million. You don't have to pay any federal estate tax on. That goes away, and you revert back to what was $5 million back in 2017. Index for inflation, I believe we're looking at somewhere around $7 million ish. I think that's the number. We won't know until we get there, right? But that somewhere around 7 million would be excluded, which means there's $3 million that would be taxed. And what we know is that first $1 million, I think we're looking at a base amount of $345,800 on that first million. Anything above that first million is taxed at 40%. So we're talking about close to $1.2 million of federal tax. We're not even talking state yet, depending on where you live. They may hit it too, but on a $10 million estate, we're talking about a big chunk that needs to be liquid. In other words, they got to pay that over to the federal government when you pass, if the Tax Cut and Jobs Act is allowed to expire. So estate planners are going absolutely bonkers. I'm on all sorts of listservs with the high net worth folks, and I'll tell you, they're really freaking out because you have right now this ability to use the entire estate tax exclusion in the form of a gift. So you could give your estate and use the higher amount, and it's going to get cut in half. And it's a use it or lose it. So the clock is ticking. So a lot of people are like, we need to gift assets out of your estate because your estate right now is under the limit. And if in the stroke of midnight, we come in and it's 2026, all of a sudden you have a tax problem. Let's make it go away. But of course, that's assuming that the estate tax is going to go back down. I've seen this play out before. I've seen the fire drill. Not a huge fan of doing that type of planning. I'm kind of let's make it as flexible as possible, but I've seen some of this before. Bonus depreciation. That's the ability to accelerate depreciation on assets that are 20 years or less useful life. You saw it being used a lot in real estate, believe it or not, because people do what's called a cost segregation with bonus depreciation. That's been slowly phasing out. This year, it's at 60% bonus. So if you put an asset into service, that's a 5-year asset, you could write off 60% of it this year. Boom. Just like that. There's a Section 179 that you may be able to use as well that could grab the whole amount, and then you depreciate the rest over the useful life. That was at 100%. And Donald Trump is saying he'd like it back to 100%. I have not heard anything from Kamala on it other than it's going to expire and go away, and there's not going to be bonus depreciation. It seemed bipartisan that they wanted that to come back because it does spur economic development. It's not giving a tax credit to anybody. It's allowing them to take a deduction sooner and get the tax benefit sooner than being forced to spread it out. Speaking of spreading it out, that is another big difference between Kamala Harris and the Trump administration, what Donald Trump is proposing on taxes. Kamala would like to see a first-year deduction up to $50,000 for startup expenses on a business, whereas Donald Trump just says keep the Tax Cut and Jobs Act there. Something called QBI, Qualified Business Income Deduction, is 20% deduction automatically on any flow-through income. So Donald Trump is saying, I'm going to benefit businesses that if you make $100,000, you only have to pay tax on 80,000 of it. Kamala is saying if you start a new business and you're putting money into it, instead of writing it off over 15 years, you get a $5,000 first year deduction, or 15 years, you're spreading it out over 15 years. A lot of larger businesses, if we got up to 50,000, we'd be spreading that puppy out. What she's saying is you can get a faster tax deduction. Of course, with new businesses, they're not always profitable, so it just may accelerate some loss. But you see a difference between the two candidates, and one of them kind of geared towards, hey, let's look at the businesses that are out there. And Kamala saying we want more businesses to be formed, and that's in their policy. You see a big difference. The other big difference, or thing that would go away if the Tax Cut and Jobs Act was allowed to expire, was this idea of opportunity zones, which is this ability to defer tax on capital sales, the sale of capital assets, and not pay tax on growth on investments in opportunity zones. That goes away if the Tax Cut and Jobs Act goes away. And I've always looked at it kind of with a raised eyebrow. I thought it was a red herring, like it seemed greater than it was actually in practicality. But there are some funds and there's some people that really did make an earnest effort into places that were historically not great places to invest, and the incentive was to use the opportunity zone. So I'm kind of sad if that one goes away. I'd like to see us try to fix and spur more economic development in certain areas. But that opportunity zone goes away with the Tax Cut and Jobs Act. The funny one was the corporate tax rate. So Kamala Harris wants to increase the corporate tax rate to 28%. You may remember Biden wanted to go all the way up to 39.6. So Kamala's a lot more moderate. But then you have Trump, on the other hand, saying, hey, I'd like to lower it. As it sits, the Tax Cut and Jobs Act made that provision permanent. And the amount that C corporations are taxed in the United States is 21%. So Donald's saying, keep that or lower it to 20, possibly 15% for domestic production companies. Kamala's saying, let's increase it to 28%. We want corporations to pay their fair share. Right now, corporations pay less than 10% of the taxes collected here. Whenever somebody says corporations pay tax, a lot of economists are going to say that gets passed on to the consumer. It's kind of all you're going to do is, if you increase that tax rate, is make things more expensive. Other people would counter that and say, hey, corporations need to be paying more. So there's the alternative minimum tax that's also on the table to increase. Kamala's talking about that. At least she's being consistent, saying, hey, we want to get more money from the businesses directly. Speaking of which, if you want to get more money out of businesses, how about these companies and these individuals that do do the offshore foreign corporations and try to avoid tax? Well, the GILTI tax is what was enacted. I believe it might have been under the Tax Cut and Jobs Act. I just remember it coming about, and I can't remember exactly when it was passed. But it's this idea of taxing businesses that are foreign if they're owned by U.S. taxpayers. Right now, we're at 10.5%. Kamala Harris would like to increase that to 21%. So we're talking about making it less advantageous for companies to play, especially with intellectual property and things like that, these offshore games where you're trying to put it into certain jurisdictions. She wants to say, hey, no, pay up. I do remember when that was enacted, they were trying to get more money back in the United States with some amnesty and some other things. But they were trying to get companies to actually bring some of that money back into the United States. Speaking of companies, another difference between the candidates is the idea of a taxation on buybacks from companies, corporations, to buy back their own shares. They often do that when they have excess profits and they're making good money. They start buying back their shares to drive the share price up a little bit, which benefits their shareholders, obviously. I've always looked at it saying I don't really mind it, but Kamala Harris would like to tax it. Right now it's at 1%. I think she wants to increase it to 4%. I get it. If you want to disincentivize companies from doing that buyback, I guess that would be one way to do it, is to tax it. Or if you say, hey, if you think it's really that great of a deal, you should pay the government a little bit of money for doing it. Under either case, that's the difference between the candidates right there. So let's shoot a few things right off the gate. Already on capital gains, pretty big difference between the candidates. Kamala Harris would like to increase them. Donald Trump would like to decrease them. Tax Cut and Jobs Act, Kamala Harris would like to let them expire. Donald Trump would say, "Hey, let's make them permanent. Let's make those lower individual income tax brackets permanent. Let's lower the corporate rate. Let's bring back the 100% bonus depreciation. Even now, since it's down to 60%, next year will be 40. It's going to go to 20 and then it'll expire. Let's get it to 100, and let's keep this qualified business income, that 20%. The other funny difference, or actually some similarity between these two, is on the tip income. Both candidates have floated the idea of making tips in the service industry. I assume it's going to be narrow, tax-free. And then also Donald Trump would like to make Social Security receiving those payments tax-free. It's always been a head scratcher how, you don't get a deduction for something, but then you have to pay tax when you receive the benefit that you've been paying in for 40 years. But there's a little bit of a difference between it, but they both agree on tips. Donald would like to see the Social Security. I wouldn't be surprised if Kamala actually starts to talk about that. I think that's actually pretty popular, is to get rid of taxing Social Security. Only one candidate wants tariffs. You never hear Kamala Harris talking about tariffs, but you hear Donald Trump throwing some pretty big numbers out there. 100% tax on China, 10% straight tariff on foreign goods. The idea is to make the United States more competitive by charging more on foreign, and the idea is that these foreign countries end up paying in these huge amounts. At the end of the day, it just makes things more expensive so that U.S. companies can be more competitive and domestically. But that is a pretty big difference between them. Big difference between the candidates is on real estate. Not only is the bonus depreciation and things like that, but also 1031 exchange. Kamala Harris has said, I would like to eliminate or not eliminate the tax-free exchange on real estate, but limit it to $500,000 of gain. That would have a pretty dramatic impact on folks that sell real estate and reinvest it. Also, all the 1031 exchange qualified intermediaries are probably not too pleased about that. They're saying, stop, please, just allow us to continue on. You've already gutted Tax Cut and Jobs Act, did away with a lot of the 1031 exchange on things other than real estate. Can't we just keep that? That's a huge difference. I already mentioned the startup difference, the startup expense difference that Kamala Harris wants that extra $50,000 under Section 195, I believe it is, for startup expenses, and Donald Trump has been mute on that one. And what's another good? The child tax credit, I believe we already mentioned, in making it $6,000 for the first year, $3,600 for years 2 through 5, 6 beyond, 6 to 17. $3,000 credit, which is a pretty big one. The home buyer's credit is a huge one. Another big one, which I don't think gets enough play, is the idea of increasing the net investment income tax. Right now, it's only on investment income, and it's at 3.8 over a certain amount, $250,000, and it hits people, kind of blindsides them on investment income. The idea is to make it 5% and have it effective on all types of income. I believe they're getting there by right now. There's a Medicare tax of that is 3.8% when you get over a certain dollar amount. I think they're talking about making that one go to 5%. So in all essence, what the Harris administration's talked about is adding about a 5% tax on income for folks that make over $250,000. I don't want that to go unsaid, because for some people, they hate that net investment income tax. We're talking about expanding it and making it active. Donald Trump has said nothing on it other than just kind of leave it be. It is kind of a sneaky tax on investment income. It's not on active business income. It's not on your wages and your other active sources of income. I think it would be a pretty good sized bite, depending on what actually would come out of what they would actually propose. It could have a pretty good sized bite on people's on their taxes. Like, that would be pretty extreme. Spending deficits on the candidates. So how much is this going to cost the United States? If we implemented their proposals, Wharton School of Business, Tax Foundation, amongst others, have put studies together, and this is what I can glean. For Kamala Harris, we're talking about a deficit of $1.2 trillion over 10 years. and it would have an impact on their gross domestic, the GDP, of lowering it by about 2%. So so we're saving some on tax. It's not extraordinarily huge, 1.2 trillion compared to what I'm going to go over Donald Trump's. Donald Trump's is going to increase the deficit, depending on which study, anywhere from about 5.8 to 6.3 trillion over 10 years, and it's supposed to increase the GDP by 1.5. Why would we care whether the GDP spikes up? Because you've been seeing interest rates increased over the last few years to try to combat the economy overheating. And you're seeing them lower interest rates so we don't have a recession. You're always playing this delicate dance of, do we have too hot an economy, or do we want to slow it down? If it's too hot, what happens is labor markets, there's such low unemployment, labor inflates, all inflation jumps up. When you have deficits, huge deficits, what does the government do? It borrows more money. More money in circulation causes assets and inflation to increase, assets to increase, and the value of the dollar to decrease. Can have a negative impact on working Joes if they don't have a bunch of assets. And if you're wealthy, of course, it's a little bit of a boon. So there's always that little bit of a class thing where they're saying, hey, let's not have it go run away. But both these guys, it's pretty clear that they have different ideas. And depending on your vision, you can decide which one's the better candidate for you. As for me, I'm a tax person. I'm going to take whatever they throw out there, and I'm going to do my very best to do what's in the best interest of my clients and minimize their tax burdens as required, to take advantage of any incentives that are out there if it's in the best interest of our clients, of course. So for tax practitioners, they're always saying, hey, more complexity is better for us. At the end of the day, though, if you're looking at it from hey, as a typical American, maybe go onto the Tax Foundation, go and see what your scenario is. There's some calculators on there that can give you an idea of how this might impact you. So you can make a pretty good decision. You can make a selfish decision as to which one may be better for you, so that when you're supporting your candidate, you can say, hey, this is going to help me out by X. And that's why I like it. Like, hey, it's the American way, right? Is voting in your self-interest. So you can actually make an educated decision. Hey, if you like this type of content, like and subscribe. I would love to hear your opinion in the comment as to which provisions you like or dislike, or whether they're missing anything. I would love to hear from you if you put some thought into this as to what you think. And as always, please share this if you think somebody could benefit from the information, and I'll see you later.